Good evening, everyone. Tonight we'll delve into Chapter 17, Internal Control Affecting Liabilities and Equity. I am Ishikin B. Villanueva and I will be discussing the internal control over accounts payable. Ang accounts payable ay mga utang ng company sa suppliers o yung mga short-term obligations kapag bumibili ng raw materials o nag-a-acquire ng service para sa business. Kasama dito yung mga utang para sa merchandise, raw materials, equipment, and office supplies. Accounts payable can also result from services such as legal, accounting, advertising, repairs, and utilities. Obligations na may interest like bonds, notes, or mortgages are not classified as accounts payable but are reported separately. Usually, may mga invoice o statement galing sa suppliers para sa accounts payable. Pero yung ibang obligation gaya ng salaries, rent, pensions, and taxes, kailangan i-estimate kasi naiipon lang ito over time. Always remember na ang accounts payable ng isang company is accounts receivable ng ibang company. Kaya kung may misstatements, malalaman din kasi mapapaalala yung creditors kapag hindi sila nabayaran. May mga companies na umaasa lang sa paalala ng creditors kaysa mag-record ng sarili nilang utang. Pero syempre, mas okay pa rin na maayos yung records mo. One of the potential misstatements in accounts payable is inaccurate recording of a purchase or disbursement. Okay, so imagine may bookkeeper na gumagawa ng check para sa sarili niya pero nire-record niya na parang binayaran ito sa isang major supplier. This is a fraud. Ang problem dito, walang proper na paghihiwalay ng duties. Kung yung same person ang nagre-record at naghahanda ng cash disbursements, mahirap yun. Plus, kung yung check signer hindi maayos na nire-review at kinakancel yung supporting documents, mas madaling makakalusot ang misstatements. Pwede rin naman magkaroon ng error, like nagbabayad tayo ng invoice for goods na hindi pa na-receive. Nangyayari to dahil sa ineffective controls sa pag-match ng invoices at receiving documents bago ma-approve ang disbursements. Another potential misstatement is misappropriation of purchases. Imagine, nag-order ng goods pero na-deliver sa maling address and nanakaw. This is also a form of fraud. Nangyayari to kung walang effective control para i-match yung invoices at receiving documents bago ma-authorize ang payments. Another potential misstatement is duplicate recording of purchases. For instance, may natanggap na invoice mula sa vendor and ni-record ang purchase. Pero na-record ulit nung dumating ang duplicate invoice. Simple error pero problematic. Nangyayari to kung walang effective control sa review and cancellation ng supporting documents, lalo na ng check signer. Lastly, late or early recording of cost of purchase could also lead to potential misstatements. Imagine yung purchases journal sinasarado ng maaga and yung purchases this period ni-record as if nangyari sa next period. Nagkakos ito ng inaccurate financial statements. Madalas nangyayari ito dahil sa ineffective oversight ng Board of Directors, Audit Committee, or Internal Audit Function. Kapag walang magandang ethical conduct mula sa taas o may undue pressure para ma-meet ang earnings targets, lumalabas ang ganitong cut-off problems.
Once again, good evening everyone. I'm Arnold D. Villafranca. After learning about internal control over accounts payable, we will now proceed to the internal control over other debts. So, by the definition, internal control over debts refers to the processes, policies, and procedures that ensure the proper management, authorization, and accountability of an organization's debt obligation. These debts might refer to bank loans, mortgages, bonds payable, or any other long-term obligations. Like what we have studied in financial management, a business corporation obtain substantial amounts of their financial resources by debt financing or equity financing. That financing involves the borrowing of money, whereas equity financing involves selling a portion of equity in the company. Furthermore, there is a process in acquiring funds, and it is called the financing cycle. This cycle includes authorizing, executing, and recording transactions, or simply it is from the acquisition to the repayment of capital. The first step of the cycle, which is the authorization by the board of directors, is one of the internal control over debts. Since we are in the view of corporation, the board of directors is the one who manages and directing the company's affairs. The bylaws of the corporation, in which the internal rules and regulations are stated, usually require that the board of directors approve any borrowing. The authorization starts from the report by the treasurer, then the authorizations of the board of directors, and lastly the issuance of the long-term debt. Just like what we have said a while ago, the authorization process begins with the preparation of a report. The report includes explaining the needs for funds. For example, it is for the expansion of the manufacturing plant, or for the acquisition of company's vehicle. The pressure must also show the estimated effect of borrowing upon future earning, or, for instance, how the payment of interest will affect the performance or profit of the company. Moreover, it includes the estimated financial position. It is the company comparison with others in the industry, both before and after the bargaining. And lastly, the report must state alternative methods of raising funds, whether it will be incurring debt or issuing capital stocks. After receiving the report by the treasurer, authorization by the board of directors comes next. Authorization is not only about approving the said financing, but it is also comprises reviewing of significant matters such as the choice of bank or trustee. Next is the type of security. Registration with the Securities and Exchange Commission, agreement with investment bankers, compliance with the requirements of the state of incorporation, and listing of bonds on securities exchange. Now you may ask why or how important is this authorization. The answer is the proper authorization of the transactions help ensure that it adheres to the established guidelines and objectives of the companies, as well as the state. It is also help in preventing any fraud. For example, without authorization requirement, an employee might incur debt in the name of the corporation. By representing himself as an authorized person, then he might use these proceeds for his personal use. Even if the employee is the one who used the money, since it is under the name of the company, the corporation will still be the one to pay the interest in principal. So, in short, the proper authorization prevent invalid. Proper authorization prevent invalid transactions from occurring. Final will be the one to pay the interest in principal. So, in short, proper authorization prevent invalid transaction occurring. Finally, after the authorization is the issuance of long-term debt. Together with this, the board of directors must receive a report stating the net amount received in its disposition, such as acquisition of plants, assets, addition to working capital, or other purposes. This is to ensure that what they had approved is the one that had been executed. Use of an independent trustee. It involves a neutral third party to oversee the administration of debt and protect stakeholders' interests. Use of an independent trustee. Bond issues are always for large amount, usually many billions of pesos. Therefore, only relatively large companies issue bonds. Small companies obtain long-term capital through mortgage, loans, or other sources. Any company large enough to issue bonds is able to find a ready market for the securities and will almost or always utilize the services of a larger bank as an independent trustee. Use of an independent trustee largely solves the problem of internal control or bonds payable. Internal control is strengthened by the fact that the trustee doesn't have access to the issuing company's asset or accounting records, in the fact that the trustee is a large financial institution with legal responsibility for its option. The trustee protects creditors' interests, monitors the issuing company's compliance with the provision of the indenture, maintains detailed records of the names and addresses of the registered owners of the bonds. It also cancels all bond certificates and issues new ones when bonds change ownership. It also follows the procedures to prevent over issuance of bond certificates and distribute interest payments. Many corporations assign the entire task of paying interest to the trustee for either better bonds or register boards. Highly effective control. Highly effective control is then achieved since the company will issue a single check for the full amount of the semi-annual interest payment on the entire bond. Issue distributes principal payments when the bonds mature. Interest payments on bonds and notes payable. It ensures timely and accurate payment of interest to avoid penalties and maintain financial credibility. So, many corporations assign the entire task of paying interest to the trustee for either bearer bonds or registered bonds. It is highly effective control. It is then achieved since the company will issue a single check for the full amount of the semi-annual interest payment of the entire bond issue. So that's that's the end of my part. So let's proceed to Mr. Ken Arnold Torres.
Good evening, everyone. I am Ken Arnold J. Torres, and I will be continuing the report on Chapter 17. I will be discussing the internal control over the owner's equity. So, first, you have to know that there are three principal elements of strong internal control over share capital and dividends, and these are: number one, the proper authorization of transactions by the board of directors and corporate office; number two, the segregation of duties in handling these transactions and preferably by the use of payments; and number three is the maintenance of adequate records. Internal control on equity. So control of share capital transactions by the board of directors explains that all changes in share capital accounts should receive formal advance approval by the board of directors. The board of directors must determine the number of shares to be issued and the price per share. If an installment plan of payment is to be used, the board must prescribe the terms. For example, if a plant and equipment, services, or any considerations other than cash is to be accepted in payment for shares, the board of directors must establish the valuation of the non-cash assets received. So transfers from retained earnings to the share capital and paid in capital accounts, as in the case of stock dividends, are initiated by the action of the board. In addition, stock splits and changes in par or stated value of shares require formal authorization by the board. Authority for all dividend actions rests with the directors. The declaration of dividend must specify not only to the amount of per share, but also to the date of record and the date of payment. In terms of independent registrar and stock transfer agent, it explains that in appraising internal control over share capital, the first question that the auditors consider is whether the corporation employs the service of an independent share registrar and a share transfer agent, or handle its own capital share transactions. Internal control is far stronger when the services of an independent share registrar and a stock transfer agent are utilized. It is because the banks or trust companies acting in these capacities will have the experience, the specialized facilities, and the trained personnel to perform the work in an expert manner. Moreover, by placing the responsibility for handling share capital certificates in separate and independent organizations, the corporation achieves to the fullest extent the internal control concept of separation of duties. Let us now proceed to the internal control over dividends. The nature of internal control over the payment of dividends, as in the case of stock issuance, depends primarily upon whether the company performs the function of dividend payment itself or utilizes the services of an independent dividend-paying agent. In the cases of an independent dividend-paying agent is used, the corporation will provide the agent with a certified copy of the dividend declaration and a check for the full amount of the dividend. The bank or trust company serving as a stock transfer is usually appointed to distribute the dividend since it maintains the detailed records of the shareholders. The agent issues the dividend checks to the individual shareholders and sends the corporation a list of the payments made. The use of an independent fiscal agent is to be recommended from the standpoint of internal control, for it materially reduces the possibility of fraud or error arising in connection with distribution of dividends. In small corporation that does not use the services of dividend-paying agent, the responsibility for payment of dividends is usually lodged with the treasurer and the secretary. After the declaration of dividend by the board of directors, the secretary prepares a list of shareholders as of the date of record, the number of shares held by each, and the amount of dividend each is to receive. The total of these individual amounts is proved by multiplying the dividend per share by the total number of outstanding shares. Dividend checks controlled by serial numbers are done payable to individual stockholders in the amount shown in the list described above. If the shareholders' ledger is maintained on a computer master file, the dividend checks may be prepared by the computer directly from this record. The stockholder list and the dividend checks are submitted to the treasurer for approval and signature. The checks should be reconciled by the treasurer with the total of shares outstanding and mailed without again coming under the control of the officer who prepared them. The cash in the amount of total dividend is then transferred from the general bank account to a separate dividend bank account. As the individual dividend checks are paid from this account and returned by the bank, they would be matched with the check stubs or mark paid in the dividend check register. A list of outstanding checks be prepared monthly from the open stubs or open items in the check register. The list should agree in total with the balance remaining and the dividend bank account. The company with numerous shareholders prepare dividends in machine-readable form so that the computer may perform the reconciliation of outstanding checks. That would be all for the chapter 17. Thank you for listening.